our goal is to make PayPal redundant.
Since then, it raised like over 56 million in funds.
Well, excuse my French, but fuck the original EVM.
Hey everyone, super excited to have a chat with Mathijs today, who is a general partner at a VC crypto native fund, Maven 11. Welcome to the show, Mathijs. Thrilled to have you here.
Yeah, thanks for having me, Leo.
So to kick things off, could you share your crypto story with us and these initial nudges towards Web3 that you have experienced?
Yeah, of course. I think everybody in crypto sort of starts by introducing themselves when they got into crypto, right? So I'll just do the same. I think I initially got into crypto around 2015. The reason for doing so, I was playing FIFA Ultimate Team. I don't know if you know it, but it's like a football game or soccer for our American friends, where you can buy and sell players that you then put together in a team. Mm-hmm. You could also just trade these without playing the game in like a web app. So I was trading these quite actively, buying players in bulk, selling them at a premium, and therefore making some money. At some point, I wanted to convert like the in-game coins with which you could buy players to like euros, which I could buy things with. However, I ran into an issue where I didn't want to share like my bank account, etc. So a buyer suggested paying me in crypto. I think back then it was Ether or Bitcoin. I'm not even 100% sure. So I gave them an address. I set up a wallet. I got some initial crypto, like a very minor amount. And then it went up in value a little bit, and I sort of fell down the rabbit hole. I ended up, I think, properly looking into crypto more with things like an augur and agnosis, like prediction markets, which became a thing in like 2016, 2017. I properly fell down the rabbit hole from there. Then I met Joost on Bitcoin Talk. The forum was heavily used back then. I saw them posting a job offer as an analyst at a crypto fund. Back then we were called Crypto Crunch, which is a horrible name. I went to meet them in Amsterdam and was hired as one of the first analysts here at Maven 11.
Right. And I feel like 2015, that's quite early on. Usually what I hear is like entering the space 2017, like getting deeper, especially into like DeFi summer, etc. So you had some initial insights there, where like Bitcoin and Ethereum were just like at lows and lows. Like it's hard to even imagine that at this day.
Yeah, but I think back then I wasn't so much looking at it like a tradable asset or anything, right? That more came after I joined the fund, because then you can see like, hey, people want to invest in this, etc. I was studying economics back then, and one of my professors was also, he gave some accounting class, very passionate about blockchain in accounting, because it's sort of a ledger system. So that also ended up with me writing a thesis about it. So then I really fell down the whole technology, etc. And then after joining the fund in like 2017, I did part-time at the venture fund. So looking at ICOs mostly back then, keeping track of like Ethereum development, and partly did my studies until sort of 2019. I think rock bottom of the bear market, where I graduated and went into crypto full time after quite some doubts, to be frank.
In your view, like looking back to what crypto was then and what it is now, and we did experience like quite a major growth. What verticals you remain passionate about since joining the space? Are there any, or have they kind of developed into something else?
Yeah, I think for me personally, like use case wise, DeFi or open finance or finance just in general, right? Like I've always had the idea that sort of more intangible assets, so things that don't have like a real world tangibility, like a house or something, are easier to tokenize. Because it just makes sense to have them on a distributed ledger more easily. So indeed, things like a Uniswap, an Aave for like debt, etc. I think these continue to be the killer use case for crypto. In addition, I think I got into the space via buying and selling gaming things. So indeed, tokenizing in-game assets also feels like a very strong use case for me. I don't know if I like on the gaming end agree that interoperability is a key thing, right? I've never myself played a game and been like, oh, I wish I could use this asset in a very different game, right? I have a Counter-Strike skin. Oh, I wish I could use this in World of Warcraft, right? I've never had that. But I do think, Vitalik started Ethereum because his Warlock got nerfed. So taking some of that power away from the game publishers does feel like a very strong use case to me. And then finally, I think things where you share compute resources. So I think deep in is like the catchphrase for this sort of vertical, right?
Yeah.
I think the reasoning for me here is that the largest and probably most successful distributed system for now is maybe still BitTorrent, right? It was at some point over half of all the internet traffic went via torrenting. I've occasionally enjoyed that Game of Thrones episode myself. And I think things like a Filecoin and Arweave, or on the compute side, back then you had Golem and IXEC. Now we are proud investors in something like a Jensen. So where you share resources in a distributed network and then use crypto to reward participants of that network, to me feels like a very strong use case.
And I think especially looking at the crypto and use cases, one of the important parts is like that digital ownership. And that's something like you also see like on your website. There is a quote that ownership will be redefined by open, inclusive, and permissionless crypto networks. How does this like philosophy resonate with you personally?
Yeah, I mean, it's of course a little bit of a marketing tagline, right? But it is ultimately why you bet on crypto, right? I think Bitcoin is interesting because it is an equal asset for everybody involved. Whether I'm BlackRock owning 100 BTC or just an individual, we have the same security guarantees, the same access to the asset, and we're on equal footing in the network. We can verify it ourselves. The requirements to run a node are equal for everybody, and so forth.
Do you think like digital identity and digital ownership like will translate into more Web2 space in the coming years, maybe?
Yeah, I think we were chatting a little bit before recording, right? I think there's definitely, right now we are seeing this sort of phase, you call it Web 2.5, and I think that's a pretty accurate term, where like we see these entities from traditional finance coming on chain. I think BlackRock has like that Biddle fund or something, I don't know the exact word, where they tokenize a fund on chain. It's growing quite rapidly. We see PayPal issuing a stablecoin. Stablecoins in general, I think, are very killer use case. So, but these are not entirely permissionless nor open to anybody, right? It's still somewhat permissioned, and these traditional companies still have quite a big say. However, I do think this is a sort of needed intermediary step to get people into crypto, to prove that these networks work, to prove that they can safeguard billions, if not trillions of assets very well. And then I think we move more to the actual crypto philosophy, which is like truly decentralized and open protocols. And then ultimately, of course, our goal is to make PayPal redundant, to just facilitate payments on Ethereum, ideally in a DAI, so a decentralized stablecoin, or in a USDC, right? I'm also comfortable with that. But yeah, I do think that there is a step in between where we just acknowledge the existence of these TradFi institutions and welcome them into the space.
Right. And do you think like platforms like from DeFi vertical or infrastructure focused protocols, do you think these are going to be the avenues where we're going to kind of onboard more masses onto crypto? Or because that's very evident from your portfolio, right? Like you especially invest in these two sectors and primarily focus on that core technology. Is that because you think we're lacking specific Web3 components for that next step of onboarding? Or is it because you think this technology will onboard the people?
I think it's mostly because that's what we saw or felt was needed, right? I think in 2017 you had CryptoKitties and Ethereum sort of grinding to a halt, or at least fees becoming increasingly expensive. I think over the past years, scalability just has been and remains an issue. You can argue about the extent, right? Should a payment be possible for 10 cents or for 1 cent? I don't know exactly, but I don't think this technology is ready for like 100 million users a day to just go onto these chains and interact with them at scale. So indeed, I think infrastructure does still need to improve. And scalability does need to be achieved. I do think over the last year or maybe 2 years, we've definitely made a lot of steps in the right direction, right? Both with Solana and with like the Rollup-centric roadmap, which Ethereum and Celestia and our portfolio are focusing on more. I think both of these have their merits, but both acknowledged like, hey, scalability needs to be addressed, and to achieve sort of the user scale that we are hoping for, we need more scalability. Well, also, I think especially on like a Bitcoin or Ethereum L1 point of view, if you're gonna move like $100 million in like Bitcoin or ETH, you don't need that much scalability, right? You are fine paying quite a high fee to get sort of the maximum security guarantees. So there is just a big trade-off space here. Yeah. And I think for the use cases that need a lot of users with perhaps less valuable transactions, you just need way more scalability, which is what we've been investing in. And then on the infrastructure side, it also is the case that continuously new things pop up in crypto, right? You solve one thing. So I think an example here is the rise of DeFi. We created a new use case with like Uniswap, which allowed for like spot trading on chain. And then like MEV became a way bigger thing because there was so much more going on chain. I think MEV was first discussed in like 2014 already, but it was not that big a theme, right? And then with the rise of DeFi, it suddenly became like, hey, now we can do these liquidations on chain and we can bid for these. And then a new infrastructure thing emerged, which is like the whole MEV supply chain, which is then again something you can invest in as a fund if you think that's going to be a big vertical category.
Right. And what do you think is the interaction or even integration of like this DeFi infrastructure verticals with avenues like gaming or SocialFi? Because that's like very, especially in the previous bull run, right? Like that was like the main hype topics. Yeah. Of course, that hype kind of died down, but we do have a lot of projects now launching that got investments at that bull run. And also now we have much more established founders going into those avenues saying like, hey, this is like the best way to gain users. Like people need fun with blockchain. We can give them that fun and the extra utility. So what do you think the interaction there is?
I think one value proposition of blockchains and crypto in general is, of course, interoperability, right? And we can maybe get into it later, how that somewhat makes an Rollup-centric roadmap. But at the same time, I think I don't know a lot of people who like start a game and are like, hey, I want to earn $5 or $10. You play the game because you enjoy it. So I don't feel like having a lending platform next to a large-scale game is sort of a requirement, right? It's not like Electronic Arts has built lending platforms and into all their games. At the same time, it does allow for creativity, right? You can see like, oh, this, and this has been built. Maybe I can plug into it. And it's not entirely up to me to determine if that's like required and used for or not. That's more up to the market and the end user. If they want to put their assets up for a loan on like NFTFi, so in-game assets or a SocialFi account or something, right? They should. Crypto allows for like financialization of anything. Whether that's sort of a net positive, I don't know, but I would like to see it be tried out and sort of play out. I think things like a friend tag, or earlier today I saw something where people could like sell their time. I think these are interesting things. Not necessarily that I think like, oh, I would use this, but it is just further financialization of, I would maybe say, intangible things like online presence, etc. So yeah, I do think it's interesting. I don't think we've been heavily investing in it.
Right. But do you think, especially looking at scalability, right, which is quite synonymous to interoperability, right, especially in the current landscape, what have been the most convincing like blockchain scaling solutions for you in terms of performance?
Obviously, I'm pretty modularity built, right? So for me, that's the scalability debate always goes back a little bit to the Bitcoin block size debate, right? Like, do we increase our block sizes and therefore increase the throughput of the system? But we make it harder to run a full node, or a node in general, you could maybe say. Since like full node is a very term that not everybody knows about in the Ethereum and Bitcoin space. What I like about the modular design, so things like the Ethereum Rollup-centric roadmap and Celestia, and maybe even Bitcoin Lightning Network in that sense, that they acknowledge like, hey, the base layer can't endlessly be scaled with like execution. So we offload a portion of that execution to L2s, L3s, and how many more layers we want to build on top of these. I think that's, for me, the most elegant scalability design. I will also acknowledge Solana has done quite a good job, and some other monolithic chains as well, like maybe a Monet down the line, by just cranking up the hardware requirements and being like, hey, users maybe don't need to all be able to run a node. Somebody who has enough incentives will be able to run one at quite high hardware cost, and that's fine. And they have also increased throughput. I personally am more charmed by the modular scalability way, also because it offers flexibility in choosing which execution environment you want to pick, etc. And it enables some sovereignty. But yeah, both have their merits. in general, I think scalability is just good for crypto as a whole, right? It allows for more users to come on board without having insane fees.
Yeah. And I mean, as you mentioned, like scalability goes back to like the original Bitcoin framework and how we can like play around with it. There's like blockchain scalability trilemma that is still like very prevalent today, because most of the time you do need to make trade-offs, right? Like between decentralization, security, and scalability. And it's very interesting integration there with modularity. And I would love to go through all these components with you to kind of see how we can approach them from the modularity angle. So, for example, if we start with decentralization, right? This is something that the community is quite divided on. Some say that as the market matures, the better DeFi products we will have, and that will allow us to move into more decentralized world, like, originally intended by the Bitcoin's white paper. But others claim that, for example, complete decentralization is impossible, and there will be always a need for teams, checks and balances, and even with the likes of DAOs, like they will not be able to fully immerse in that decentralization angle. So what do you think is the ceiling for decentralization, and how do modular blockchains help protect it?
Very good question. I think it's almost impossible to answer, which is a bit of a cop-out. I acknowledge that. But right, like decentralization is such a vague term and not like quantifiable. So you could argue that Ethereum is way more decentralized than Bitcoin because it has more client diversity, right? If I run a Bitcoin node, I have 99% chance I just go to Bitcoin Core. And therefore, it is centralized on that component.
Right.
Ethereum, I think, has like execution clients, consensus clients, and like 5 or 6 in each of these. So it is quite decentralized in that sense. For me personally, decentralized just means that I'm able to verify the chain, right? So I don't need to be able to run a validator with a large stake on it. I just need to be able to run a node that verifies what's going on that chain. I think the Celestia light nodes are the best case to do this, right? But again, I am an investor there, so I have my biases fully acknowledged. I think that I can verify the chain and that everything on it was correct on something as light as my phone here. That's for me the right trade-off in the decentralization. And then you also mentioned things like a DAO, checks and balances. I think the core base layer can be very decentralized. That doesn't mean that every application on top of it also needs to be, right? I think USDC is the best example of this. Not at all decentralized. I think every user of USDC knows that. Circle can freeze their assets at any moment, yet it runs on an entirely decentralized network and people are fine to use it. So I do think when you go into more the application space like DAOs, then things like checks and balances, and indeed some trade-off between how decentralized you want to be, obviously will be made. And that depends then also on the use case and so forth.
And especially like if you look at the governance and coordination of like the tech stack, right? Doesn't it become like much more complex due to like independent execution layers in the modularity space?
Yeah, I think so. But that's what I find pretty compelling about like a pure data availability layer, right? It doesn't interfere with that governance in the execution layer. So I think rollups on Ethereum will often sort of feel obliged to be EVM based because it is the Ethereum virtual machine, right? Yeah. Whereas in Celestia, there's no preference for any execution layer, whether you're like a Move VM, a Solana VM, or Sila VM, or EVM, and whatever adaptation of these, right? You can fine tune them yourselves. You can say, well, excuse my French, but fuck the original EVM or the current spec of it. We go back to the one that was out there in 2016 or 2017. And therefore, the coordination becomes less of an issue because you have no layer one or underlying layer to report back to. You can just live completely independently.
I agree. It definitely disables the complexity and therefore it makes it much more scalable, right? Like because you need much less things to take into consideration and also like govern in a sense.
I think governing these crypto protocols is extremely interesting, right? A lot of people say like the social layer is where it all comes down to. We've also seen this happen with like the DAO fork from Ethereum, etc. But then we even go into more what I said about decentralization, right? Measuring anything there is almost impossible.
Yeah, I agree. And even like if we jump into the second component, which is security, right? Some say that modular chains can add more resilience to crypto. And some argue that it's kind of borrowing the same models that are already established to upkeep that kind of security threshold, but we're, as I mentioned, like kind of disabling the complexities there. What is your take? Which side are you on?
Yeah, I think fundamentally they do add more security because it is just easier to run a node. I will also say it is maybe earlier for them. A lot of these rollups, I mean, Optimism have rolled out fraud proofs, I think, within the last month. So before that, I wouldn't say that they were more secure because they had no fraud proofs. So that's also still work in progress, right? Mm-hmm. A lot of rollups right now still rely on some sort of multi-sig governance that is just a centralized point of failure. Also, I think we have seen rollups go down because the sequencer didn't have enough ETH to pay gas fees to the L1. I think this was Arbitrum. Is that more resilient than an L1? No, I don't think so for now. I think fundamentally we will get there, but it will just take a little bit more time since the stack is also very much work in progress.
Are the exploitation risks here because we're very early in this modularity world, or will it really be able to counter these bottlenecks in the meantime?
Yeah, I think the exploitation risk depends very much on the virtual machine you pick, right? I think one of the core value propositions of like the Move programming language, which was built by Libra over at Facebook, I think, or Meta, I should say now, was that it is formally verifiable and therefore way more secure. Because of the modular stack, you can just pick to build on that, right? On a rollup that uses the Move VM. So you are able to maybe pick execution stacks that have less exploitation risk. At the same time, I don't think it matters for like a DeFi app, whether you're on an EVM rollup or on an EVM on ETH L1. The smart contract is the same, right? So the exploitation risk, I think, are the same. I don't see any large change there. I just think that because you offer developers more choice, the more choice you offer them, at some point you'll then start to see convergence on a certain tech stack, which maybe has less exploitation risk. And which tech stack that is, very frankly, I don't know yet. Maybe it still needs to be built, but I do think fundamentally it will reduce exploitation risk.
And would you say like scalability aspect is also completely dependent on the virtual machine that you're building on with the modularity layer, or the modular stack actually bring more scalability just because of its intrinsical design?
Yeah, I think the last part. So I think Mustafa from Celestia does a nice job here, right? He frames scalability not just as throughput, but also as the requirements to run a node. If you have both of these, it's true scalability. I think if you use that definition, which I also lean into, I think then modular blockchains that have a data availability sampling light node definitely increase scalability. You can have like massive blocks while still being verifiable by everyone. And I think that sort of unique trade-off is something we haven't seen before in crypto.
Right. And especially like we already touched upon it, but Celestia really introduced the concept of modularity to the public, right? And you as like a VC participated in Celestia's seed round in 2021. And since then it raised like over 56 million in funds. What do you attribute that success to?
Just sheer founder quality. I think that's the first thing we as like a pre-seed seed fund look for. So are these people strong founders? Do they know how to execute, build a company, build a team throughout both bull markets and bear markets, right? I think that's an often overlooked part in crypto. It's quite hard to build and remain focused if like prices are constantly moving. And then secondly, I think they're just building a good tech solution. Rollups are sort of coming into existence. So for context, we met Celestia back in 2019. And that's, I think, when I first reached out to John Adler. And back then you had the initial inklings of like moving execution off chain. And again, this started already with like Lightning Network and state channels. Raiden Network back then was doing work on Ethereum. Then you had like Plasma Cash, which later turned into like optimistic rollups. And I think the general premise was always, hey, we move execution off chain and therefore we can allow for more scalability. And then Celestia took that to quite the extreme. Like if we move execution all off chain, we don't need to do any execution on the base layer. And I think in that sense, it was very unique and just an interesting technology. And also very much non-consensus back then. I think right now less so, right? A lot of people talk about modularity, etc. But back then you had all these alternative L1s raising capital with like these charts or graphs where they were all listed and all their features were sort of shouted out there, like, hey, we have this programming language, we have this much shards, we have this much transactions per second. And then you had like this lazy chain, which basically said like, hey, we only do two things, which is publishing data and ordering it. And we don't give a shit about what you do on it, right? Whether you want to post a picture of your cat or roll up data into your namespace. I would argue the second is more important. That's up to the fee market to determine, right? And I think that alternative way to reason about building blockchains and the architecture definitely has got on in the space. And then, using the word modular to sort of describe it all definitely helps from my marketing point of view.
Is it correct to call Celestia a data availability layer, or does it go beyond it with either the roadmap or the tech stack that it can utilize?
No, I think it's just the data availability layer. I will also say, I said like it does only that. It also has a small execution component, right, to keep track of TIA and where it's staked, who runs a validator, who can be slashed at some point, right? So there is a small execution part. And then I think especially what's currently interesting in the ecosystem is these ZK accounts. What that allows you to do is to trustlessly bridge TIA from the Celestia base layer onto rollups out there. And what you then start to get is that TIA as an asset will perhaps become more money within the ecosystem, right? I argue that every crypto has some monetary aspect to it because there is some group of internet community who are like willing to accept it for bartering. And I also argue that that's like a reason why a lot of these things trade at a premium compared to maybe their sort of cash flow value. But I think something like ZK accounts will also enable that for Celestia. And therefore it can become more than just a data availability layer. Well, technically not, but the asset can also become more than that. It can become like, I think this is somewhat but the modular money thing, where all rollups in the Celestia ecosystem use TIA as their unit of account, and therefore it goes beyond just publishing data, but also being the ledger of record for TIA.
Yeah, and rollups are indeed really integral, especially for ecosystems like Celestia. One of your portfolio companies is building sovereign zero knowledge rollup. The company is called Sovereign Lab, and you invested in it on top of Celestia. So how are you planning to kind of really endorse the whole Celestia's ecosystem? Is your plan to really kind of support protocols like Sovereign Labs further on to build on top of that layer? Or are you sticking with the core threshold and then kind of leveraging the upcoming projects like later on?
No, I think it's our role as a venture investor and therefore also large stakeholder in the ecosystem, right, to bootstrap that ecosystem and to be a part of it. So obviously we still have to do our sort of normal due diligence on things like our Sovereign Labs, right? Hey, are these founders capable of executing what they promise? And in the Sovereign Labs case, yes, 100%. They're one of the strongest guys I've seen so far. And is this like a technically interesting concept? I think in the case of Sovereign Labs, it gives people the ability to create ideal ZK rollups. So a generalized ZK VM. I think they're currently being used both on like a Solana VM sovereign rollup, but also Citrea is using their stack for a Bitcoin rollup. It inherits economic security and liveliness from the DA layer. So from Celestia or Avail or EigenDA or whatever DA layer they want to use. And you can use whatever programming language you want. So I think these sort of technical merits are definitely there. And then, of course, for us, it's also very nice that they are very closely working with the Celestia team. That helps us doing due diligence, right? We can ask a little bit like, hey, are these founders legit? How is it to work with them? And secondly, we know they're building in a legit ecosystem. So that just makes it easier to bet on it.
Right. And what about shared sequencer networks like Astria? What differentiates them from competitors like Radius or Espresso or Fairblock? Why did that particular team of founders convince you to put a little faith in them?
Well, I'm going to sound like a broken record, but again, it's first and foremost founder quality, right? And I'm also not going to compare them to their competitors per se, but I think if you ask me to make like the bear case for the modular ecosystem, one component of it is just that you break up interoperability a little bit, or composability, or whatever we're sort of name we want to put on there. But you talked about like games stepping into DeFi applications. That's just less easy if both live on separate rollups. Even though if they share the same DA layer, there is a lot more possible, but still it is something you break a little bit. And then Astria is a shared sequencer network. if these rollups tap into the same sequencer network, there do some composability guarantees arise. So you can make sure that they're both included in the same block, and therefore you somewhat fix that shortcoming. In addition, we talked about like some rollups going down, right? Like, are their security guarantees better? I think if they were all using Astria, that would be less the case once it's sort of live on mainnet and has proven itself out, right? So it allows sequencers of rollups to decentralize quicker, which I think is good for security and like liveliness. And then finally on the user experience, which I think is maybe the important part in crypto, right? We want end users to have a good user experience and to come on board. Astria offers faster finality. So Celestia blocks have like a 12-second block time. Yeah, a lot of chains have like longer block times. As a user, that's just not the smoothest thing ever. Maybe again, for a large transfer, I don't mind waiting 10 minutes, right? For a Bitcoin block. For an ETH transfer and DeFi as well, I maybe don't mind waiting 10 seconds. But for a lot of use cases, I want instant finality. And what Astria does is they sort of take that burden briefly. So they call that soft confirmations. They go to the user and say, like, hey, I'll make sure this gets confirmed and posted on Celestia. And then for the user, that's a way better user experience.
I mean, payments, it's such an integral part of crypto, and it kind of is shown as the competitive aspect with like platforms like Visa, you know, and PayPal, that you don't need to wait like 2 days for your money to get to the other side of the world. Crypto is borderless, right? And to have like those kind of waiting times still at this point in time, it's quite counterintuitive to what we imagine.
Yeah, 100%. And that's also, I think, I don't really believe in like paying for my coffee or groceries with Bitcoin or ETH ever, right? I think that's the way to go. But with like stablecoins, I can definitely see that happening. But then you do need that instant or almost instant confirmation of the payment.
Yeah. And I think modularity can really, really enhance that. And you're even taking modularity to a different level. You're organizing a modular summit this July together with Celestia. Can you tell more about this event and what inspired its creation to really spread the word about modularity and perhaps your portfolio company?
Yeah, of course. It's a sort of side career going from a venture investor to event planner. I will also say this year I'm slightly less involved than maybe the years before, just because the Celestia team is taking care of it so well. So yes, and Ned, big shout out to them both for running the whole show. I think sort of this whole event with Celestia thing started with an event in Lisbon. From top of my head, back then we had Starknet, CK Sync, Fuel, and Celestia on stage. And it was very conceptually and tech focused, right? Because none of these things had like anything live apart from Fuel V1. Then we did the first modular summit in Amsterdam. There were like 300 people attending, and it was very well received. It was a one-day event, and it was still talking more about like the promise of where we're going, right? Like, hey, this is what we're building, this is why it's interesting, and we're gonna do our testnet somewhere over the next months or something. Then last year we did it in Paris. That was, I think, the largest one to date. It was a 2-day event. There were like queues of people, and what I think was very interesting here is that it definitely already went a little bit beyond just Celestia. So that modular ecosystem, they like to say like a modularism with maximalism. So Avail also gave a talk there, which is an alternative DA layer similar to Celestia. And you could even say they're competing, right? At the same time, it's good if they also get a stage to talk about their architecture choices, which may or may not be more optimal to like something like Celestia. And then now we're again organizing it after ECC in Brussels. It's going to be a 3-day event with, I think, a lot of very strong speakers, sort of all the brand names in crypto, right? From both the modular ecosystem, also some monolithic ecosystem people. I think the speakers were announced yesterday. So Mert from Helios, for instance, Big Solana, who obviously is also coming to give like the counter argument to the whole modular movement. And in addition, I think this year the main theme is somewhat modular expansion. So now this thing is live and we can actually have apps on top of it, right? I can trade on Evo, Lyra, and therefore be a Celestia user. And there are rollups on top of it. And I think that's going to be very interesting to see. Like now we can talk about the actual use cases for end users instead of more theoretical, like, hey, once we deploy our testnet, this is what it's going to look like. And I think that's what I'm looking forward to most. apart from like organizing a large scale event and having to worry about all sorts of things, which I'm like, okay, so this is what organizing a wedding looks like.
I can imagine. Yeah, like what are these challenges that you face when organizing such a big scale event?
Everything, right? From like noise, I think that's one of the most important things. Like, do you have a good main and second stage where people are audible? I think one of the worst things for me, crypto, is when you go to a conference, people are talking on stage, and there's like 200 people networking in the back, and you can hear no words what people are saying. And these are like insanely practical, right? It seems like such a minor thing. People getting to the venue, picking the venue in the first place, does it have the right sort of vibe? I think the current Modular Summit is going to be in a Berlin vibe, sort of an old factory. It fits extremely well with crypto, I would say. And then, is there enough food for people? These type of things. How many people fit into the venue? And then the most important part, the speakers, right? I think that's the like quality of people coming there to talk. How do you pick them? But also, how do you make sure they all give their presentation on time? So these type of things you just run into. But I think everybody who's done an event in crypto will recognize this.
Yeah, but I think what will really help you out, timing of the event, right? Like right after ETC is going to have a lot of people in there, and to have like those entities, those kind of crypto natives, crypto degens, everyone around to kind of jump into the modularity scene. That's very interesting and could contribute a lot. And I personally really looking forward to the Modular Summit event. I think it's going to be a great opportunity for networking and also learning more about the space. What do you think, just like out of curiosity, your passion like for modular scene, how did it came about?
I've been watching and following Ethereum ever since I joined the fund. So we have been a large investment into Ethereum for the full lifetime of the fund, and we think it's one of the more exciting ecosystem. Back then, I think the most. And then as a result of that, you were somewhat modular built throughout. As I described, this sort of rollup-centered roadmap, which Vitalik posted about, was, I think, the segue into it, and also the maybe acknowledgement of like, hey, this is the right direction to scale these things. So yeah, I think just purely that. And then if you use these rollups, I would say over the last year or so, I'm way less active in crypto just out of a time span. But if you use these rollups, you just notice that the user experience is so much better and they're so much cheaper. It feels like a no-brainer.
We kept on looking for scalability solutions, right? And there are much more alternatives now, including modularity, including other solutions like proto-dunk sharding, etc. And I am expecting to kind of see those collaborate, maybe merge into something new at some point. But for now, we are seeing a bit of a competition there.
Yeah, and then also I think this plays into like people asking, can you endlessly invest in infra? Like new things also pop up, right? When I open my my MetaMask or something today, I can see like 5 versions of USDC, on Arbitrum, Optimism, ZK saying, I think that's not really a good user experience. So then you get into that domain, I think it's called chain abstraction, where you sort of abstract all of that away from the user. And that opens up a whole new trade-off space. Like, do you want to abstract it all away, or should users be aware of the security trade-offs they're making with having USDC live a specific rollup compared to Ethereum mainnet? So if you solve one thing, another issue pops up, right? I think Solana also had that with, they were sort of built for tremendous scalability. It's like the monolithic counterpart, right? And then they got so much traction that they also ran into issues of transactions not landing. And then they fixed that at a remarkable speed, might I add. But I think that's going to be continuous in crypto. As you onboard more people, you run into new things, and these need to be solved again. And what I like about our space in general is that so far we have the talent to just continue to solve these, right? And I think that's the most applaudable thing. I think Vitalik posted that nice meme about, I think it was called Ethereum FAT or something, I don't know exactly anymore, but there were all these things, and then the doors open, which have been solved by the Ethereum researchers, and then something new pops up, and they just go and solve it again, which to me, that definitely resonates with like the spirit of building things in crypto.
Crypto is still niche. We're gonna get more and more people on board, and to be frank, like right now, maybe we're not ready to onboard them all yet, right? Like the next million users, can we actually suffice with the technology we have to actually give them a proper experience? I'm not sure, and it's kind of like the more and more time passes by, we're going to see that, and we're going to have new solutions. We're going to have new issues, like you mentioned, and it's not a vicious cycle, like a positive cycle of innovation, right? Yeah. Like it's never going to end.
No, I agree. At the moment, crypto is no longer niche. I think it also becomes less interesting as a venture investable asset, right? I'm talking now from a venture point of view.
Yeah.
I think we should invest in non-consensus and niche things because that's where the sort of outsized returns are going to be if you turn out to be right. So I think the moment that sort of crypto is generally accepted across the whole world as like, I don't know, a payment method or something, I think the venture scale returns are just no longer going to be there. But I do think we're quite far out from that.
I agree. Yes, that's something I also wanted to discuss with you. Like, where do we stand as like still a very promising investment niche? Whereas like there are so many projects building out, there are so many fundraising rounds currently going, right? And we have tons and tons of VCs and investors looking for these investment opportunities. But at the same time, valuations are higher, fundraising rounds are different, terms maybe not as favorable as before, because of course we now have a better understanding maybe of healthier tokenomics or how to sustain longer term. How do you balance that as an investor between like keeping the project going longer, but also maximizing your returns? Because at the end of the day, as a venture firm, you need to make capital.
Yeah, no, that's 100% true. I view us, and also I sort of mean venture capital and crypto, just as a tool to let founders de-risk, right? Like, I want to build something. I don't have the money to pay everybody's salary beforehand, right? Not every crypto builder is a millionaire already from crypto. Ideally, we attract people into the space who are not yet, right? We get new people in there, and I need some capital to do that. And that's where we as venture capital firms come in. We provide that capital to make the first few hires, get everything set up, and just build a crypto company. And then, of course, sustainability is a thing, right? But that's also, I think, very dependent on which investor you bring on board. Are they looking for a return in the next 2 years, or does their fund have like an 8-year life cycle or 10-year even, where they have the time to sort of watch a project grow to a level of maturity that at some point indeed they can de-risk some investment, but they are not forced to do it from the get-go. And I think that's the most important part. So yeah, that's what I think about it. And indeed, valuations change, but that's also just a market, right? The more money comes into it, and if there's not enough quality projects, for instance, then indeed people start bidding up the same thing, and that's a very comfortable spot to be in for founders. But yeah, this will also reverse, like after the FTX blow up, for instance, funding rounds were very different. Yeah. So I think as a venture fund, the right way to go about it is just continue to allocate capital to talented builders and founders throughout cycles. So don't over allocate in a boom cycle. Don't sit still if it's a bear market. Just keep going and do what you do. And then typically you end up averaging out pretty well.
And I agree. And I believe we could talk about the venture capital space and also modularity for hours here, but I want to be very respectful of your time. So thank you, Mathijs, for coming on to the show and sharing your insights on modularity, on your investments in projects like Celestia and Astria. It's very interesting to hear these kind of comparison and really advancements in the space from an investor point of view. We have so many like podcasts and other like written avenues that we hear from founders themselves, but they're the ones that are very immersed in the technology because they're the ones building it out. But as an investor, you see it from the external point of view, and you might be able to point out, you know, the mistakes, the competition, the other kind of angles that might be difficult to notice when you're in that very internal bubble. So thank you for that. Could you share with our listeners how they can continue following your work, learning more about Maven 11, and perhaps even attending the Modular Summit in a month?
Yeah, well, I think you can find us on sort of Twitter. Apart from that, the Modular Summit is happening in Brussels right after EFCC, so July, I think 11th till 13th. Feel free to buy tickets and come by. We're very keen, and I think it's going to be a great event. And apart from that, I think you can find us on all the regular crypto channels. If you're building something cool, do reach out. Yeah, I think that's about it.
Thank you once again, and can't wait to meet you in person in the Modular Summit, and also maybe having one of these chats once again about how did we develop from this point onwards with Modular Network. That's always very interesting. Have a great day, Mathijs. Thank you.